Hey, good morning, everyone. Brian Hoops from Midwest Market Solutions. This is our Market Insider TV and our opening commentaries Tuesday, January the 19th. Thanks for joining us and good morning. Look at the the markets here, the outside markets first. We'll look at the grains and some of the news this morning. Crude oil up $1.70, about 2.5%. We had a big sell-off yesterday. It may have dragged the grains down a little bit, but the fact that it's a little higher here, the dollar is a little firmer as well. Now, the crude oil could be supportive to like bean oil and corn this morning, but I think most of the focus is on South American growing conditions and then the report that's coming out on Friday, and we'll look at that as well. So I don't put a lot of stock in these outside markets having a lot of influence on the grains. Certainly, the dollar is going to make a big difference on the metals. It'll look at wheat as well, and these grain markets to a smaller extent, because longer term direction is going to come from that dollar with our export forecast. But right now we have rains and snows across the Midwest to focus on. We have weather in South America that looks very good, maybe drier at the end of the month, and then the report coming out Friday. So we'll talk about all that here in a second. The stock market here, 25 points lower. Gold and silver a little bit firmer. And then we have corn down a penny overnight. Beans 1.25 higher. And the wheat has been mixed. Chicago down again like it was yesterday. Kansas City a quarter cent higher. Oats were better overnight. We'll talk about some of those reasons here in a second, but we hit contract lows yesterday, multi-month lows in the soybeans yesterday. This is not a bull market. It's not just something that I've heard some commentators already this morning talking about. It's just because of the crude oil being down, and that is absolutely not the case. That is maybe a small portion of the reason, but certainly not the entire focus. USDA comes out with their report on the 12th. That's Friday at 11 o'clock Central Time. We have the estimates all in your newsletter, and we will look at them here in just a second. Corn yield expected to be virtually unchanged from last November. Ending stocks, 2.1 billion bushels. This is a big number. Even though it's down from December, we have a lot of crop to chew through, 2.1 billion bushels. And our quarterly stocks compared to last year, this is kind of a big one. If you're holding grain stored, unprotected, look at this number and tell me why we should be rallying the grain markets. We have much more corn on hand than we did a year ago. Demand is a little bit better than a year ago, but not enough to make a major difference. Soybean yields virtually unchanged in November. Ending stocks unchanged from last December. So again, these numbers are fairly tight, but if you have a big South American growing season and big production out of there, which we're expected record numbers, it doesn't matter that we have 245 million bushels here. This number could easily grow if China and the unknown destination starts canceling all the purchases that they've made. Soybean production in Brazil should be cut to at least 156. There's private estimates that are in the 150 to 151 range. USDA last month was 161. They definitely need to cut it, but they're usually conservative. So at 155 was our estimate that we submitted. 156 makes sense. But some analysts, some privates, especially out of Brazil, are in the 149 to 151 range. Argentina's production should be right around 48 to 49 million tons. So when you add these together, you're still 14 to 15 million tons larger than last year. So that's why I say this U.S. ending stocks 243 is not burdensome. It's not super tight, and it's likely to grow in future reports. The big thing for wheat, I think, on Friday's report will be the seedings report. It's going to show all wheat acres at 35.7. That's down from last year. Hard red wheat at 2.51. Soft red wheat down a little bit as well. I think we'll start to see Kansas City gain a little bit against Chicago if this is verified. The weather for wheat is bearish because you have so much snow across Kansas, Nebraska, so it acts as moisture, but also insulation blanket against very bitterly cold temperatures that are forecast to come next week. So overall, I don't look for this to be a real bullish report, and usually it is a major market mover. Want to mention, markets are going to be closed Sunday, January 14th, Monday the 15th, in observance of Martin Luther King Day. Grains will resume trading Monday evening at 7 p.m. That is next week. Egypt is seeking wheat out of the world for February. It looks like it's going to go to Romania. They're by far and away the cheapest offers this morning of that tender. Packer margins, negative $143 a head. That's why we were recommending to sell that rally yesterday in the cattle. Didn't quite get to our target price, but look at the fundamentals and we think they're negative. The show lists are up again this week, 8,400 head for a total of 248,000 head. This snowstorm is fundamentally friendly here for a couple days, but then we start going back to the fundamentals and talk about packers cutting kills, trying to prop up their negative margins, show list numbers being larger. You're probably looking at steady to lower cash trade, and that is going to be a little bearish for this market. All right, hope you have a great day of trade. Good luck, everyone, and as always, reach out to us if you have questions, comments. Have a good day, good luck, and good trading.